Hello and welcome to this week's Crypto Roundup. This week we cover the obstacles Binance's former CEO Changpeng Zhao still has to face after the company he founded's historic settlement with the DOJ, the U.S. Treasury's recent sanctions on the crypto mixer Sinbad, massive increases in cryptocurrency fund inflows, relatively speaking, and the ongoing proceedings of the FTX bankruptcy case, among several other stories. I'm Michael Del Castillo, a Knight Badged Fellow at Columbia University, and this is your weekly crypto recap. After the historic settlement last week between Binance and the U.S. Department of Justice, founder Changpeng or CZ Zhao has stepped down as the chairman of Binance US's board of directors. The decision follows his guilty plea for violating the U.S. Bank Secrecy Act, leading to a $50 million penalty and his resignation as Binance CEO. Despite this, Zhao will maintain his economic interest in Binance US. Adding to Zhao's challenges, the federal judge has ruled that he cannot leave the U.S. for now, marking him as a, quote, serious flight risk. The decision comes after Binance agreed to pay $4.3 billion in penalties for operating as an unlicensed money-transmitting business and violating sanctioned laws. In a perhaps not surprising twist, former BitMEX CEO Arthur Hayes has come to Zhao's defense. In an essay that extensively quoted from the Hebrew and Christian Bible, Hayes questioned the severity of the treatment Zhao has received compared to traditional financial companies involved in similar wrongdoings. Hayes, who faced similar charges and received 6 months of house arrest, called the treatment of Zhao and Binance, quote, absurd, and highlighted what he characterized as the arbitrary nature of punishment by state. CZ's guilty plea certainly distinguishes him from the CEOs of traditional companies who escaped the Great Recession they helped cause with nary a lecture from the government. But it should also be noted that CZ's personal wealth at the time this was recorded was estimated to be about $25 billion, according to the Bloomberg Billionaires Index. In other words, assuming Bloomberg's index is accurate, CZ's company paid about 0.004 of his personal wealth. Perhaps he didn't get away with too strict of a punishment after all. On Wednesday, the new bosses at FTX, the beleaguered cryptocurrency exchange, received approval from a U.S. bankruptcy court to sell assets worth approximately $744 million. These assets include interests in various crypto funds, notably Grayscale and Bitwise trusts. The largest portion of these assets is nearly 22.3 million units of Grayscale's flagship Bitcoin fund, GBTC, valued at around $597 million. Followed by Grayscale's Ethereum trust with 6.3 million units worth about $87 million. The development is part of FTX's ongoing bankruptcy proceedings, which began last November after the exchange filed for Chapter 11 bankruptcy, giving it the potential to reorganize and maybe even reopen. The court-appointed CEO, John Ray III, had previously testified to Congress about the, quote, utter failure of corporate controls, end quote, and the misuse of funds by FTX and its affiliated trading firm Alameda Research. The exchange's former CEO, Sam Bankman-Fried, was convicted of fraud and other charges earlier this month. The sale of these assets is a potentially critical step in addressing the bankruptcy claims, which have been trading at 60 to 65 cents on the dollar recently. This week was marked by significant optimism and activity in crypto markets, with a notable surge in investment inflows and developments among exchange-traded funds. CoinShares reported that weekly inflows into cryptocurrency investment products reached a 2023 high of $346 million, with Bitcoin accounting for about 90% of that. This week also marked the longest streak of inflows since the late 2021 bull market, indicating a robust resurgence in investor interest. Of course, that's still very relative, with the broader ETF market experiencing a $31 billion increase in inflows over a similar period. Simultaneously, crypto asset manager Pando Asset, that's Pando, not Panda, filed an application with the U.S. Securities and Exchange Commission for a spot Bitcoin ETF. The Chennai, India-based firm joins a roster of 13 companies, including financial heavyweights BlackRock and Fidelity Investments, as well as another one we'll talk about shortly, seeking regulatory approval for similar products. Though SEC Chair Gary Gensler has become the man to hate at many corners of crypto, a growing list of his court losses seemingly has many optimistic. Bitcoin's price soared about 48% since early September and 126% since the beginning of the year in January. Back in ETF land, CoinDesk reports that Grayscale is updating the Grayscale Bitcoin Trust, or GBTC, agreement to prepare for a potential conversion to a spot Bitcoin ETF. At the same time, the SEC is seeking public feedback on whether to approve yet another ETF application from another mainstream firm, investment management giant Franklin Templeton, indicating a possibly accelerated decision-making process. In related news, Bitcoin Strategy ETF, or BITO, hit a record $1.47 billion in assets, further signaling rising institutional interest in Bitcoin. The New York-based cryptocurrency lender Celsius, which filed for bankruptcy last summer, began allowing withdrawals for certain account holders on November 29. Customers of the custody program with Class A general custody claims and/or Class B withdrawable custody claims can withdraw up to 72.5% of their crypto minus transaction fees, according to a report by The Block, which cited court documents for its reporting. This opportunity is available until February 28, provided the investors did not previously participate in assets custody settlement. However, customers who voted against the reorganization plan will not be a part of this distribution. Their funds will be managed separately by the litigation administration over the next 6 months. This move follows Celsius's Chapter 11 bankruptcy filing in July 2022 and the subsequent approval of a settlement plan in March, allowing deposit account holders to recover a portion of their funds. On a similar topic, Bloomberg cited the proverbial people familiar with the matter in a report that troubled crypto exchange ZipMex has proposed paying creditors 3.35 cents on the dollar, with a potential to rise to 29.35 cents amid restructuring and creditor pushback. Digital Currency Group has agreed to repay $275 million to its subsidiary Genesis by April 2024. The agreement comes as a resolution to the lawsuit filed by Genesis against DCG, seeking the repayment of $600 million in loans. The dispute began when Genesis made 4 loans totaling $500 million to DCG in 2022, which DCG later attempted to convert into open loans, meaning they could have been paid off at DCG's leisure, a move Genesis says it did not consent to. So far, DCG has repaid approximately $227.3 million, leaving a balance of $324.5 million. The agreed repayment of $275 million by April is expected to provide Genesis with $200 million in value over the coming weeks. On Wednesday, the U.S. Treasury Department sanctioned Sinbad, a cryptocurrency mixer the department alleges was used to conceal the origin and destination of hundreds of millions of dollars worth of Bitcoin. The department's Office of Foreign Assets Control, or OFAC, identified Sinbad as a, quote, key money laundering tool, end quote, used by the notorious Lazarus Group, which has been linked to the totalitarian North Korean government in numerous reports. The sanctions follow the revelation that Sinbad allegedly played a significant role in masking assets stolen from various sources, including Atomic Wallet, Axie Infinity, and Horizon Bridge. The Treasury underlined Lazarus Group's alleged use of such tactics to fund North Korea's ballistic missile program. It's unclear where Sinbad was based, but the site's alleged creator, known as Mehdi, declined to share the location in a Wired report earlier this year. However, as part of the FBI's seizure of Sinbad's site, the U.S. investigator indicated cooperation between U.S., Dutch, and Finnish law enforcement. This development echoes the Treasury's previous sanctioning of Tornado Cash, a crypto mixer founded by an American and Russian, also used by Lazarus to allegedly launder money, according to an FBI report. London-based blockchain analytics firm Elliptic published a statement claiming that Sinbad is likely a reincarnation of Blender, the first crypto mixer to face OFAC sanctions. Deputy Secretary of the Treasury Wally Adeyemo emphasized the U.S. government's commitment to combating illicit activities in the digital asset sphere, saying in a statement, quote, "We encourage responsible innovation in the digital asset ecosystem. We will not hesitate to take action against illicit actors." It should be noted that laundering stolen funds for a totalitarian government's ballistic missile program isn't the only reason why some people might want privacy. The FBI statement makes no mention of whether or not any non-criminals use Sinbad for humanitarian or other purposes. In a startling development, the hacker behind an alleged $48 million theft from KyberSwap, a decentralized finance market maker, issued what appears to be an unprecedented demand for complete control of the company. The self-proclaimed Kyber director sent an on-chain letter via an Ethereum transaction, insisting on full executive control over Kyber Network, the company behind KyberSwap. The demands extend to temporary authority over the company's governance DAO, access to all internal documents, and forfeiture of all assets, including intellectual property. In return, the hacker promises a new era for the company, offering to double salaries for non-executive employees and provide a 12-month severance for those choosing to leave. The hacker also assured token holders and investors that he, she, or they would personally manage a turnaround, hinting that the new, quote, cryptographic project, end quote, would no longer be the, quote, 7th most popular DEX. It was unclear if the hacker meant the decentralized exchange would become more popular, maybe the 6th most popular DEX, or stop being a DEX altogether, or something else entirely. The bizarre turn of events has left Kyber Network in a challenging position as they contemplate their next steps amid this unprecedented situation. Cosmos founder Jae Kwon has proposed a significant shift in the network's trajectory. This week, the platform's governance token holders voted to reduce the inflation rate of Cosmos Hub's native token, Atom, from around 14% to a maximum of 10%. Instead of accepting the vote and moving on, Kwon did the crypto equivalent of taking his ball home after the game didn't go his way, proposing a blockchain fork that would create a new token. Kwon's proposal, which he shared on social media, would turn Atom 1 into a separate entity within the Cosmos ecosystem, potentially supporting both the existing Atom and a new Atom 1 token. Not that that's going to get confusing. Some users, like ex-user Eggs in Staken, view the fork as a positive step towards diversification and security, while others, like Cosmonaut June, expressed concerns about the implications of not accepting the results of a democratic voting process. The specifics of the Atom 1 network, including its governance, tokenomics, and technical architecture, remain largely speculative. However, Kwon claims he wants to collaborate even while not being willing to accept the result of the vote. These DEXs are starting to look an awful lot like politics as usual. And that's all. Thanks so much for joining us today. Unchained is produced by Laura Shin, with help from Kevin Fuchs, Matt Pilchard, Juan Aronovich, Megan Gavis, Nelson Wang, Shawshank, and Margaret Curia. The weekly recap was written by Juan Aronovich and edited by myself, Michael Del Castillo. Thanks so much for listening. I look forward to speaking with you next week.
Unchained is now a part of the CoinDesk Podcast Network. For the latest in digital assets, check out Markets Daily, 7 days a week, with new host Noel Atchison. Follow the CoinDesk Podcast Network for some of the best shows in crypto.